The Central Bank of Iceland today announced it will keep its policy interest rate unchanged as inflation remains high. I have John Bentsson, an economist at Íslandsbanki, on the line. So John, this decision was actually expected. So what are your views on it, and what are you expecting to see from the central bank over the coming months?
I think the decision is logical given the relatively moderate change in outlook since the central bank published its last forecast in May. And in the new forecast, worsening inflation outlook is offset, at least to a degree, by slower projected growth. So the decision to not change rate is understandable in that respect. That being said, more hawkishness would probably have been appropriate given the worsening inflation outlook. In particular, if you believe that central bank is still keeping to its inflation targeting monetary policy, but the fact is that I guess the mandate of the central bank has become somewhat more complicated in Iceland since the imposition of capital controls and on the financial collapse. So, if you look past the sort of official mandate and take into account the state of the economy, I guess the decision now and the tone is broadly appropriate. So for us, as we expect actually rates to remain unchanged throughout this year, and then see a couple of hikes in 2014 as growth picks up and inflation remains stubbornly high.
And staying on the topic of inflation, Iceland's inflation rose to 3.8% in July and continued to stay above the central bank's target range. So do you think the central bank are actually tackling the problem of inflation correctly?
Yeah, well, that is a good question. And again, if you were to look at the central bank or view it as a purely inflation targeting central bank, it would probably be appropriate for them to be more hawkish in the rate decisions given the persistence of the inflation. But in fact, the picture is somewhat more complicated. The central bank has been worried about the slowness of the recovery in Iceland, and actually the recovery slowed down after picking up speed a couple of years ago. It sort of has slowed down again. So in my view, they are right to look to the pace of the recovery as well. And actually, they are not really on a pure inflation target, as they have taken a much more activist management, for example, of the currency, of the exchange rate, through market interventions. And so the point is that their de facto monetary policy is much more broad than the inflation target alone would suggest.
And the IMF and S&P are worried about the details of the household debt reduction plan and how it's actually going to be financed. Are you concerned about this, and do you think it could increase government debt in the long term?
Well, yes, I think the concerns of the IMF and the S&P are reasonable and understandable, given the almost complete lack of detail on both the execution of the debt reduction plan and the financing. This plan was a major campaign point of one of the parties in the ruling coalition before the election, and they actually went through the whole election campaign without explaining in any kind of detail how this would be executed and financed, other than saying that the financing would be courtesy of the estates of the failed banks in Iceland and their foreign creditors. Since then, since the election, there has been no further clarity on how this exercise is going to be executed and financed, other than there has been a mention of a temporary fund bridging the gap between the debt reduction itself and the financing. And as you can imagine, any mention of a government fund with this mandate is in most senses and purposes equal to the government taking on additional debt. So, be it direct or indirect increase in government debt, there is definitely a probability of government debt increasing as a result of this plan.
The IMF has also raised concern over the currency, as it feels the slow progress on lifting capital controls could make the Icelandic kroner more volatile. So do you think this is something that Iceland should be taking more seriously? And can you tell us more about capital controls?
Yeah, well, the capital controls and the lifting are probably the biggest economic challenge facing Iceland today. Now that the fiscal picture is broadly more favorable than it was a couple of years ago, and the economy is recovering, the capital controls remain, and the issue has actually become more challenging in recent quarters. Capital controls are in our view, hurting foreign direct investment. We've seen a number of plans being complicated by a number of factors, including the capital controls. And what is maybe even worse, even if it cannot be measured, they are impeding the creation of innovative manufacturers of export goods. We had a number of companies springing up in the last decade that increased goods exports considerably and increased diversification as well of the economy. We've seen no such companies in recent years, and actually the goods exports from Iceland have only increased very moderately despite the lowest exchange rate that should facilitate export growth. And that, in my view, is to a large degree due to the capital controls.
Thank you very much for that. Well, viewers, do stay tuned to Dukascopy TV, and tomorrow I will be bringing you the Commodities Corner. So, see you then.